Welcome to Highway Herald, your roadmap to the latest in auto. Today we're exploring the growing Mexico-China partnership, which is shaking up both the automotive and global economic landscapes. This collaboration is transforming North America's economy and reshaping international trade. With major investments in electric vehicles and infrastructure projects, this partnership challenges long-standing power structures. Could this be the rise of a new global order? Join us as we uncover 7 key reasons why the Mexico-China alliance is making waves worldwide. Reason number 7. Mexico's push for economic resilience and independence. For decades, Mexico's economy has been closely linked to the U.S., primarily through agreements like NAFTA and the USMCA. While beneficial, these ties exposed Mexico to U.S. policy shifts and economic instability. Recognizing the need for a more balanced strategy, Mexico has turned to China as a key partner in diversifying its trade relationships. Between 2018 and 2023, China invested $2.3 billion in Mexico across sectors like automotive manufacturing, renewable energy, and infrastructure. In 2023 alone, China committed $2.72 billion to Mexico's automotive industry, demonstrating confidence in Mexico's industrial growth. This influx of Chinese capital is strengthening Mexico's industries, reducing dependence on the U.S. and positioning it as a global trade player, boosting economic resilience and influence on the world stage. Reason number 6. China's strategic investments in Mexico's future. China's investment strategy in Mexico is focused on high-growth industries, particularly the rapidly expanding electric vehicle (EV) sector. In 2023, Chinese automaker BYD announced plans to sell 50,000 electric vehicles in Mexico, with projections to double that number by 2025. But China's interests extend beyond EVs, with significant investments in renewable energy and infrastructure. These efforts include building research centers, advanced supply chains, and workforce training programs, fostering sustainable industries capable of global competition. By targeting electric vehicles and renewable energy, China is positioning itself as a leader in emerging markets. For Mexico, these investments bring more than economic growth. They provide technological advancements, new job opportunities, and a modern infrastructure, driving long-term development and ensuring Mexico's competitiveness on the global stage. Reason number 5. Mexico, the new gateway for Chinese electric vehicles. As the global automotive industry shifts towards electric vehicles, Mexico has become a strategic hub for Chinese automakers entering the North American market. Companies like BYD and GAC Aon are taking advantage of Mexico's proximity to the U.S., its skilled workforce, and favorable USMCA trade agreements. By setting up manufacturing operations in Mexico, Chinese automakers can avoid tariffs, lower shipping costs, and improve their competitiveness in the U.S. market. For example, BYD is already selling electric vehicles in Mexico, including the Han EV sedan and Tang EV SUV. This shift benefits both Chinese automakers and Mexico, driving economic growth, creating jobs, and positioning the country as a rising leader in EV production. However, questions remain about the impact on Mexico's domestic industries and its long-term trade relationship with the U.S. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now, let's explore reason number 4. Mexico's lithium reserves, the new frontier for global resource diplomacy. Lithium, often called white gold, is becoming one of the world's most sought-after resources, essential for EV batteries and renewable energy storage. Mexico's vast lithium reserves have caught China's attention, with the country eager to secure access to this valuable resource. In 2023, China's energy giant Zhejiang signed a major 20-year liquefied natural gas (LNG) deal with Mexico Pacific, signaling China's intent to tap into Mexico's mineral wealth. Gaining control over lithium and other critical minerals strengthens China's position in the global electric vehicle supply chain, giving it a competitive edge in the renewable energy race. This puts pressure on the U.S., which also seeks access to Mexico's lithium. If China continues to dominate, the U.S. risks falling behind in the EV sector, prompting it to develop strategies for securing these vital resources. Reason number 3. China's Belt and Road Initiative reshapes North America. China's Belt and Road Initiative is reshaping global trade through extensive infrastructure investments. With a focus on enhancing trade routes, the BRI is making significant impacts in North America, especially in Mexico. Investments in ports, railroads, highways, and logistics networks are transforming Mexico's infrastructure, positioning it as a vital player in the global supply chain. By incorporating Mexico into the BRI, China is strengthening its regional influence and challenging the U.S.'s historic dominance in North American trade networks. This shift is altering global trade flows and redefining Mexico's economic landscape. For Mexico, joining the BRI presents opportunities to upgrade infrastructure, improve trade connectivity, and spur economic growth. However, Mexico must navigate its relationships with both China and the U.S., balancing Chinese investments while maintaining strong ties with its North American partners. Reason number 2: U.S. policy failures and Mexico's shift in trust. While China has aggressively courted Mexico, the United States has struggled to maintain its influence. Over the past decade, shifting trade policies, tariffs, and inconsistent diplomatic approaches have created trust issues with Mexico. The renegotiation of NAFTA into the USMCA was meant to strengthen ties, but it left businesses uncertain about the future. Additionally, tariffs on Mexican goods, framed as immigration control measures, have strained relations, signaling to Mexico that the U.S. may not be a reliable trade partner. In contrast, China has positioned itself as a stable and consistent ally, filling the gap left by U.S. policy missteps. Although the U.S. remains Mexico's largest trading partner, China's growing presence signals a shift in alliances. If the U.S. doesn't address these issues, it risks losing Mexico as a vital ally and influence in the global economy. Reason number 1: Mexico's workforce evolution, a shift towards innovation. The Mexico-China partnership is having a profound impact on Mexico's workforce. China's investments go beyond infrastructure, focusing heavily on workforce development. Through partnerships with universities and vocational institutions, China has introduced training programs to upgrade skills and encourage innovation across Mexico's labor force. These initiatives are essential for transforming Mexico's economic identity, making it competitive in high-tech global markets. Chinese companies have established research centers in cities like Monterrey and Guadalajara, providing training in fields such as renewable energy, electric vehicle manufacturing, and artificial intelligence. This focus on human capital is helping Mexico transition from a low-cost manufacturing hub to a leader in advanced industries like clean energy and high-tech manufacturing. With a skilled workforce, Mexico is becoming an economic powerhouse, equipped for long-term growth and resilience in the global economy. Verdict: the New World Economic Order? The Mexico-China partnership is not just a regional development, it's reshaping global economic dynamics. By leveraging Mexico's strategic location and abundant resources, China is establishing a stronger foothold in North America, challenging traditional power structures, and reshaping global supply chains. This growing collaboration offers Mexico a unique opportunity to diversify its economy, modernize its workforce, and solidify its position as a leader on the global stage. However, this shift also creates challenges for the United States, which must adapt to these evolving dynamics or risk losing its influence in its own backyard. As the world watches, the ripple effects of this partnership will likely have far-reaching consequences on global trade and geopolitics. What do you think? Are we witnessing the dawn of a new global order, or will the U.S. rise to the challenge? Share your thoughts in the comments below. Don't forget to like and subscribe to Highway Herald. Thanks for watching and see you next time.